prices, what governments do, what the central banks do, and then it affects everything at the micro level. And so we talked a little bit before the chat about Freakonomics, and which is basically microeconomics, and basically what everybody, students, parents, employers, everybody's trying to recalibrate or re-optimize under the new circumstances. And the thing that I think many people figured out is that those circumstances change. It's like every month you have like something that changes, and you have to like refigure out what you're going to do, how you're going to deal with the restrictions, are you going to send your kids to school, are you comfortable going to work? So all those micro decisions are for many people decisions now, which is a bit unheard of. But then they add up, and that is then the macro perspective. So you can think about, say, two levels of macroeconomics. Let me just talk, and whenever you have interruptions or questions, please feel free to go ahead. I'm fine to do this on a loose lip basis. Is that okay?
Sounds good.
Very good. So the first thing with macroeconomics, so macroeconomics is concerned with, as mentioned in the introduction, with GDP, say income of a country, consumption, and consumption is about 60 to 70% of GDP. So it's a very large share of GDP. Labor force, so how many people are working, and then prices. And one thing we've seen over COVID is that we're really concerned with, say, labor force and GDP. Consumption is sort of okay. There's things going on. We can talk about it later on. And prices, nobody's really worried about that. Like inflation, it might be a concern of the near future, but right now that doesn't seem to be a major concern. So let me just see if I can share my screen. Yes. And I'd like to just to show you some. This is from the website of Statistics Canada. And I think that is the first lesson of COVID, is that if you want to talk about the macroeconomy or any impact on the economy, you need data and statistics. Most macroeconomic statistics are, they come in with a delay of like 3 months, that we know what happened 3 months ago. That is very fast. That is like light speed in macroeconomics. So basically now we're trying to figure out what happened three months ago. We can make forecasts, but those forecasts are can be pretty unreliable. So let's look at what do we have here. So this is from StatCan. This is the Canadian Economic Dashboard. They have a dedicated webpage on COVID-19. And so we have here on the right-hand side, if you can see my cursor, real gross domestic product. These are changes, and then here on the left we can choose a couple of things. So this is month-to-month changes. So we're now, this is June 2020. So again, this is July has to come in, September, August has to come in, September has to come in. So basically now we know what happened in June. And that is not unheard of. That happens in any country. So StatCan is not really slower, so this happens in any country. And this is actually quite fast to have an idea of what GDP did. So if you think about GDP as the income of the country, what did happen? Well, from February 2020, and then to March, from 1 month to the next, it dipped with -7%. And the best picture that you can have with that is if, say, your income, that all of a sudden you would lose 7% of that income. So if you would earn $100,000, all of a sudden you have $7,000 less to spend from 1 month to the next. And then there's another from 11% drop. So it's like it keeps on going from March to April, and then it bounced back. So in May, it bounced back from April. And these are month to month. Let's see what happens over the longer period. So this is comparing February this year with February last year. And so up to February, things were pretty okay. So if we looked at like a year growth. That was 2%. That was pretty okay. Then if we look at, say, April to April last year, then we get a feeling of what is the overall impact, or like the 12-month impact. And that is a dip of 70%. So if you think about, are we in a recession? We are in a recession. Like GDP decreased quite a bit. And this is enormous. Like even the financial crisis of 2008 was not so fast and not so steep, not so deep. And so the shock and the speed at which this goes is really, really fast. So that is GDP. That is the first, that is national income for everybody. There's an underlying question here, and I want to say that this is the income of everybody. Say all households, all firms in the economy. This doesn't say anything about distribution. So if you're concerned about inequality, and you think about how does this affect, say, the wealthy people versus, say, the bottom 50%, those statistics are a bit more difficult to come by. It's also not entirely clear what happens, but there is a feeling that, say, a lot of this impact is on everybody, but more proportions on, say, the lower part of the income distribution. It doesn't say that the wealthy people are not hurt. If you lose your job as a rich person, that also hurts. So let's see what happens to employment. And so this is again the I want employment. So this is month-to-month changes. And again, this is spectacular. I mean, it's very depressing, but it's spectacular how fast this goes. So over the course of two months, basically, in terms of employment, like 1 out of 10 persons lost their job. And that is just enormous. It's not entirely true because this is employment, which is a slightly different measure, but it's still, this is just enormous. And these are really the people that lost work. It bounces back, but again, these are month-to-month changes. And so, of course, when the lockdown, when we entered phase 2 and phase 3 in several places, more and more people found a job. And so if you want to have a longer perspective and we look at, say, the 12-month, say, compared to, say, last year, then you can see there is a bit of recovery, but we're still not there. So this is the lockdown, April, and then basically we are here. And again, we still need to have September to see what happens over there. So that's employment. The third thing that I mentioned is prices. And so this is inflation. This is a measure of the general level of prices. And this is the 12% change. You can see that in the lockdown, prices actually went down, generally speaking. That could be a measurement issue. It's not so easy to measure inflation when many stores are closed. And you assume that people are still buying as if nothing happened. And so then the prices ticked up a little bit. The general inflation for right now is not the main concern of many policymakers. That is really employment and unemployment. So that is a bit of the macroeconomic picture. Like it's taken together, it's a very steep shock, very sudden, very fast, and the decline takes much longer than actually. So people who want to think in terms of a V, it's more of a V with one sharp decline and the other leg is much flatter. So the recovery will take much longer.
Professor?
Yeah, let's do something.
On the tangent on talking about income and employment, we do have a question regarding that. So there has been a news article, I think in early August, that there seems to be an illusory increase in wages because of a disproportionate amount of low wage jobs being free. So do you observe or do you believe that this trend will be ongoing? And do you anticipate any effects in the near future?
In terms of wage growth?
Yeah, because there seems to be a illusory increase because the low paying jobs are being like unemployed.
Yeah, so it's not truthfully. I don't know what the answer is, and that has to do with the fact that there are so many things going on in the labor market right now
Okay.
that makes it a bit difficult to measure or to compare things. So usually you would say when you look at say wage growth, you would look at say people that are working in the normal times. You look at how much they earn, and then you would compare it to say a year before in normal times. What we're trying to do now is we're trying to compare wages of people who are working in absolutely abnormal times compared to normal times. And so the danger that is an apples and bananas comparison is there. The reason I'm saying that is that I showed you the employment statistics.
Mhm.
If you look at unemployment, so the people who are willing to work but who are really out of a job, that has gone up. So there's a lot of people there out there that are looking, wanting to work and looking for a job. By the same token, there are quite a few people who are being either furloughed or still on the payroll, but are sitting at home. There's a large government program that actually pays a wage subsidy to employers that apply for that. And so those people are sitting at home and they're on the payroll, so strictly speaking, they're employed, but part of their paycheck is being paid or subsidized by the government.
Mhm.
Then there's the trouble bit of what happens at the bottom of the labor market. And so you can imagine that there's a lot of people at the bottom of the labor market who are being laid off, and so who would show up in the statistics as being unemployed or out of the labor force.
Mhm.
But it could very well be that, say, the underground economy has also been increasing. And so if you think about many small firms, that they still find a way to do it under the table or not. And so I haven't seen many statistics about that. All I'm trying to say is that there's a lot of things moving in the labor market.
Mhm.
So it's very difficult to get a good grasp of what exactly is going on. Now, of course, it sounds good if wage growth is growing.
Yeah.
But yeah, if you weed out all the bad jobs and you're only left with the good jobs, and the good jobs typically have wage growth in good times, and good jobs have a little bit of less wage growth in bad times.
Mhm.
You're just measuring the wage growth of good jobs. But that doesn't help people who are out of a job right now.
Okay.
So that's a bit of the question.
There's actually another question about employment. So, seeing that work can now be done remotely, it seems like there is a possibility that firms could outsource labor opportunities or originally given like because they were restrained geographically. So do you foresee any major changes in like allocating labor opportunities outside?
Yeah, that's a good question. Coming from a country, the Netherlands, where part-time work and telecommuting are like, working from home are a very culturally accepted thing. So if I were to work in the Netherlands and I want to work from home 1 day a week, that would be perfectly fine. There's typically arrangements for that, and it's embedded in the firm culture and in the labor culture. Here in North America, that seems to be a bit of a culture change, and I think what employers are finding out now, both workers and firms, is that if you let people work from home, there's actually quite a few workers who like that, to work from home, to not have to sit in traffic and to just to do that. I think there's also, it works both ways. I think there's also some people who find out that they cannot work from home
Mhm.
and who actually have a preference to just go into the office. I think the question is more about, should we be afraid that there are good jobs that are now going to be moved towards other countries?
Mhm.
And that I'm not so sure of. in the sense of insofar those jobs were still here in Canada, there probably was a reason why they still were here in Canada. And the fact that people are now working from home in Canada, I don't think that that would be a massive change of jobs to, say, other countries in the terms of outsourcing. Okay. Do I think that there will be a more permanent change in culture of that some firms might going to offer this as a perk? So if you want to work from home, you can. It will pay for your workplace at home. Will do something, cover some expenses there. That I can see in the future, that this will be something that will be a COVID remnant, maybe as a benefit for us with us to stay.
Makes sense. Thank you. I think we have a question from the participants.
Yeah. So I do also have a question that just popped up, at least about the mobility of labor. So both in Canada and surely in other countries as well, what do you think are some of the more effective approaches that are being taken to increase the, at least the exchange of labor from a more physical work environment to a more to the newer jobs that are going to be growing from this and the newer requirements that are going to be growing from this?
But I think it's going to be a longer trend or a staying trend.
Yeah. So do you think there's going to be like some staying trends in at least the types of jobs that are out there? And if so, how can you increase the mobility of labor from the older kinds of jobs to these newer kinds of jobs?
So the transition from, say, being physically present in the office to, say, a more telecommuting or a more screen-based labor force, if you wish. Is that what you're pointing at?
Yeah, something like that.
Just trying to get the question straight. That is more of the how should I say that? For sure, I think there's a lot of people that are now experiencing with like what it is to be in an online environment. And I think it's not just workers in the workplace, but I think it's also schools, students, and the like. And so I think there's many people that are now experiencing what does it mean to do online school. If I talk to my students, I'm not so sure. So I think that students, for example, see a benefit in online teaching, that they see some flexibility, some other things. For the most part, I think there's also, they do miss certain in-person contact, the social aspect of that. And so if you would take those ideas to the labor market, I think that's very similar. So if you work in teams or if you work in a firm culture, that is a social environment. And a social environment is very difficult to build up if you only have online contact. Maybe I'm getting too old for that, so maybe the new generations are much more flexible in that and much easier to make online contact. But I think 20 years of online dating have not found a silver bullet to that online dating is an absolute perfect substitute for meeting in person and all that. So I have a feeling, if I just may generalize that idea a little bit, that it's going to be the same for the workplace. That there will be elements that we take over, which can be as simple as like working one day from home or working at a distance. But I think it also depends on if you work in a firm that really has a corporate culture and wants to stress that corporate culture. I think that's very difficult to do online. Okay. The other thing I want to point out is we have found out over the last 5 months basically some structural flaws in our society. And the structural flaw, there's many, but the one structural flaw I want to point out is the lack of reliable internet. And you can build up everything online as you wish, but if you only have like 2 or 3 large internet providers in Canada, and it is very expensive. And what shall I say about internet reliability and internet speed? I don't know. You can draw your own opinions about that. But do you really want to build like the future of the labor force if that is the constraint? And so maybe you should think about, as a government or as a society, of if we really want to move into that direction, maybe we should also invest in like better internet, more equal internet access for everybody, and that type of thing. Does that make sense?
It does. Thank you.
Does that answer your question?
It does. You actually added some awesome points as well. That added to it, yeah.
I'm happy to take more questions. I like this type of. I also like to hear if people have their own ideas. So if that's.
Actually, I had a question myself.
Sure.
Sorry, here, I'm just going to turn on my camera. So everyone always knew that the future economy would be more technology-based, and just technological advancements would take over a large portion of different jobs and different industries. Do you think this pandemic is highlighting the need for our economy to move forward in more technical advancements in the way we operate businesses and the way we work with our employees?
That's a great question. So I think if you look over, say, the long-term trends in the labor market, I say over the last 100 years, you see a clear shift from, say, 1900 or 120 years, from 1900s, from agriculture to, say, industry, and then later on from industry to services. And that became painfully clear in the COVID pandemic, that it was services that was hit really, really hard. There's a couple of industries that are hit really hard. So the meat industry is just by nature of how that is done. Yeah, it was also hit hard, but it was really like the smaller businesses, the services, like the personal contact, that type of industry. And that is a large, I don't think we realized how much we relied on those personal services. And I think what you saw happening during COVID was actually very interesting, is that you saw basically the replacement of one service with another service. So instead of people going to restaurants and bars to eat out and dine in, which would be the service of patrons and waiters, you saw people eating at home. And so basically you saw the transition to, say, delivery, all sorts of delivery services. And that happens pretty smooth. Like it's a labor market, just, if you let the labor market work, it's really sucks if you, excuse me, my word, it really sucks if you lose your job. There is nothing, but there's always a new opportunity there. And I think that is something that surprised me in the COVID, is that people are really creative in trying to find new opportunities. Now, coming back to your question, what has technology to do with that? And I think what you see happening is that there's an interesting almost marriage or partnership between people trying to find new opportunities and new jobs. And that takes some creative thinking and some business opportunities. And I admire people who have that. I'm a professor. I'm not really entrepreneurially minded, but I can appreciate people who are. But those people are looking for opportunities, are very creative about it. And then they use technology for that. And so in that sense, it's basically, you can look at this from two ways. Either you can look at this, the economy is technologically advancing. What do people need to do? The other way of looking at it is that the economy is just moving. And people just try to use the tools that there are and that they can use to work with that. And I think both perspectives, just two different ways of looking at the same thing, is that I think people who did like ballet classes or music lessons. Before COVID hit, they would never thought of like online music lessons, online ballet, and online gyms as like that people would do this. And now with COVID, they have to. And it works both ways. And so there's both and supply and demand for this type of services because people are not leaving their house and other people need to find some jobs. So you see all sorts of new innovations. And it's not like big time innovations. It's like people using existing technology in a new way. And that's an innovation as any.
Yeah, thank you.
It is also a very, I think if you're not sick and you don't have to worry about cash, I think it's also a very exciting time.
Yeah, I think this pandemic is actually almost forcing the world to transform and adapt to a new way of living. I think eventually we might have gotten to the point where we rely more on like online services, but I think it's kind of sped up our reliance on technology more.
That's a good point. I think your guess is, or my guess is as good as yours in that regard. But, I think those things tend to go gradually. People don't like change. Most people don't like big. Like younger people are more likely to adopt new technology, but anybody older than 25 or so is pretty set in their ways and wants to use a phone with like big numbers and all that. So you get to what you're used to. But I think there's under the force of the pandemic, people are forced to change their ways and forced to think about it. And of course, you may not like it, but you have to. And while doing it, you might actually figure out that there are actually benefits of doing this. And that brings you to the point of thinking of, why didn't I do this before? Well,
Yeah.
Of course, the answer to that is, well, pre-COVID, I could have told you that there are benefits to this, but that would require you to try out something new. Yeah, if people are not willing to try out a new restaurant, then people are also not willing to try out like a new way of working. The other thing is that it also forces you to think about what you miss, what you crave. And so I think there's a lot of people that are craving like a back to normal.
Yeah.
In some way. And how the normal is going to look like, I don't know. How long that normal will take, I also don't know. But I think there's some aspect of whatever it's going to be, it's probably going to be a blend of, we're going to carry some of the good and some of the bad over from the pandemic into whatever new normal we find. But maybe I'm too limited in my thinking there. That's also fine. So.
I think this is probably a really bad analogy, but it feels like pre-COVID would be our medieval ages, and then post-COVID would be our like Renaissance. So there would be a change in our structure and labor and how we do with our way of living.
Yeah, I mean, it's not. I think what I know from history is that it's one of the big questions of why the Renaissance happened when it happened.
Mm-hmm.
What was exactly special about? And I think there's a couple of like cultural factors and economic factors that helped with that. I think the other thing is to not forget that the medieval times was there, I think, from 500 to 1500 roughly, so it will span like 1,000 years. And the Renaissance is also a good, I think, 200 or 300 years or so, depending on what you do.
That's true.
And so to try to capture that in 3 months, I think, or 5 months or so, I think is a bit ambitious.
Okay, that's quite a stretch, yeah.
Yeah.
Are there any questions from our students live here?
I just had a question. It's about the macroeconomic impact of a second wave. I know there's a group of doctors. There's specifically an interview with a doctor associated with UFT, and he was proposing that rather than wait for a second wave to shut down the economy, that we should impose a predetermined lockdown period where people would know of the impacts ahead. I was just wondering what your opinion would be on like what the impact of that would be, and if that would be better than just allowing a second wave to like sneak up on us and like gradually shutting things back down again.
Yeah, this is more the question of what is the best way to deal with a pandemic. And there's the medical aspect to it. And I think that will be a debate for years to come, whether you see different countries over the world handle this in a different way. Some countries have a very strict lockdown, some countries have a lockdown with stipulations or regulations. Other places didn't do a lockdown at all. It's not so easy to figure out what the best way is. And I don't envy the researchers that are actually looking into that, because we don't have a control group. It's not that we like shut half of the country down and like the other half of the country, like, and the control group really would be like we shut half of Toronto down and the other half we don't. That would be something. It's not that, yeah, some remote area that we lock down and then we let Toronto go out. That's a wrong comparison. So we don't know. I think that's the difficulty there. The other thing is that when the lockdown came in March, and it seems so long ago, but I think in March there were still a lot of people out there that had a hard time believing that this was as bad as it would be, or as it turned out to be. And so the question is, if we had not locked down the place, would those people have actually come to the realization that this was a necessary measure? And again, I give my opinion for a better one. If people really want to argue that this is a lockdown was not necessary, that is fine. Right? With the second lockdown, I think right now, since March, there's a more general awareness of this. I think we know more about the disease. There we know more about the seriousness. We know more about the transmission. I think mouth coverings are more accepted now than they were in March. Like, if you would have said in March, let's not lock down the place, but everybody has to wear a mask. I don't know if people would have done that in March. Now people do. Now people might be more susceptible to it. So the short answer is that even if some closing might be necessary because of the second wave, I think there is a general more accepted attitude of there are things that we need to do this that would prevent a general closure. And so I think in March I can see a general closure as helping to raise the awareness. I think right now businesses have changed. If a company tells you, or it's like the grocery store tells you that you have to wait outside until there's less people in the store, now it's okay. In March, I think people would be very upset if they would have had to wait outside. The second point that you mentioned is really good. It's about expectations. And so that is sort of what will be better. If you would know that if we cross a certain threshold, we're just going to lock the place down. That's basically, or that we just do it on a week-to-week, let's see approach. And I think that is a horrible government problem. And so I don't envy the policymakers that have to make this type of decision of, do you wait until things get out of hand and that you tell, like, if the ICUs are full, then we're going to lock down the place. I don't know what's better there, and people's expectations there matter quite a bit. Does that answer your question a bit?
Yeah, I think so. But I was more wondering, like, whether you thought, like, how the economic impact would be. Like, would we have less of an economic impact if we had a planned shutdown versus if we were forced to shut down again? Like, would GDP decrease more if we had like a surprise lockdown versus a controlled one?
Oh. So let's see. If I was a firm and I've already had a horrible 5 months where I have like basically 4 months with say low or zero revenue and lots of fixed costs. I just spent a lot of money to invest reopening my business. And I'm looking at the numbers and I'm thinking to myself, this could be that I don't have to close down my place. We might be able to sing it out. So there's a possibility that we do not have to lock down the place. In that case, I keep the workers that I have in the place. If on the other hand, I know for sure that in a month I have to close down my business, I actually might as well close today. And so even though I would know for sure that this month I can do business, but it's the anticipation effect. If you know that you have to shut down for a month, and then maybe for 2 months, because who knows, they start with 1 month and then they do it for 2 months, because that's what they did in the previous lockdown. Then I might just well close down my firm. And so I can see a scenario where what you say makes sense, that maybe a forced lockdown for a short period of time just to contain this might help. I can also see that people are trying to look ahead and trying to predict what's going to happen and just try to make sense of this. And a lockdown is a pretty brute instrument in that case, because it's really, you know for sure that you have to close the place.
Okay, thank you.
So the short answer is I don't know.
I do have also a question. I'm not sure if there's any more material that I have to cover before the end, but if not, so this question is based on a book that was released kind of in the beginning of the lockdown by a U of T professor, Joshua Gans, and he mentions at least that he at least predicted, of course, that there would be a very sharp fall in GDP, but that it would be comparable to an extended holiday, to an extended. It's as if, you know, if you look at product day to day during Christmas Eve, you're going to have just as sharp of a decrease in GDP as you had during COVID. But he mentioned that that'll be the case. But my question comes with that, and he also mentioned that it wouldn't really be a recession because it wouldn't be due to a flaw in our economic system. It would just be a planned kind of pullback just to go back there. Now, my question is, do you think there are flaws in our economic system, either in demand or supply-wise, maybe debt-wise, that was exposed due to this shutdown? And if so, do you think that this is going to be starting to show up more and more as we leave the state as we are now, or as we enter a second wave?
Oh yeah, I think the pandemic has shown the cracks in both our public health system, as well as in our economic security system. And you can think of a couple of things. One thing that surprised me in March was the speed with which firms were laying off workers. And you can look at headlines, but it was really spectacular, like spectacularly bad, like 20,000 workers in a week of one company A and 10,000 workers there. And it's just, over the course of a week. Like you see, those people are just being forced into unemployment. Now, from a practical perspective, the unemployment system is not designed for those large inflows. And then it becomes damaged. So I like the aspect of a holiday where you have like free time and you get some unemployment benefits and you can just sing it out. Yeah, I don't know. I think people who have been unemployed and people who are unemployed in a pandemic, I think it's an extremely stressful situation. Unemployment is not very generous in Canada, which is the reason why they have the SERP benefits added to that. And not to mention that if you got unemployed in the first weeks of March, there's a waiting time. And if the system is overwhelmed, you can easily wait for like a couple of weeks more. So that was one. So it showed the flaws in our unemployment insurance system. And so I think there's a couple of economists and government officials that are now thinking very hard of when we get out of this, what should we do about the unemployment insurance system? Should it be more like a SERP benefit or something like that? For example, to qualify for unemployment insurance, not everybody who loses their job qualifies for unemployment insurance. And so everybody with precarious work, Uber drivers, freelance, all those workers don't qualify for unemployment benefits. You lose your job. What do you do now? So that was one. I think the other crack is that cost of housing in Canada is pretty large, especially in the metropolitan areas. And the first thing that you saw in many cases was not so much the loss of income, but it was really the cost of living. And so if you think about the household budget, you have the money coming in, and then you have the money that you have to pay if you don't want to get evicted from your house, or if you don't want your credit score to blow up because you can't pay your mortgage. And so it's very interesting, if you actually read the newspaper articles, is that it's not so much that people are worried about losing their job and losing their income, because there you can make amends, you can do certain things. It really was people that are worried, do I get evicted if I miss a month's worth of rent? And then not so much, do I get evicted, but will I be able to find a new home, rent a new house and in many metropolitan areas in Canada, that's actually a disaster. And so it's more the basic social needs of housing and shelter, and protection of both homeowners, and so it's just a balance between landlords and tenants, as well as between banks or mortgage providers and homeowners. I think there are still a couple of battles that are going to be fought, or have to be fought, or need to be revisited there. So I can think of more cracks in the system, but those were two things that were really upfront.
And when it comes at least to, so all these cracks also caused for debt levels to rise a lot to a good extent, even though you do have made of a lot of people paying off their debt because of some of the government benefits, at least in the US. At least the people who were already in debt before and were already in trouble, those are people who are whose delinquency rates are skyrocketing. And same thing goes for small businesses. You had small businesses that were financially stable before. In many cases, they're doing fairly better with some of the government help. Those who were already kind of shaky before weren't. And you can also see that in a national level, well, it's happening, for example, in Argentina right now, at least to a good extent, trying to become more financially stable. So the question comes, when it comes to debt and the debt scenario that we're going to be seeing worldwide or market-wide, how do you think this pandemic is going to be affecting that? Do you think it's going to be just higher debts, or do you think maybe as the bad debtors kind of default, the leftover debtors are going to be more the quality ones from the start? What do you think is going to happen to the landscape?
Yeah, excellent question. I will just give a couple of pointers there. So the first one is whether you are a government, a firm, or a household, if you want to weather a bad shock, you need to have some cushion somewhere. And in other words, if you are a firm that cannot borrow, either because you borrow to the max or you simply don't have the credit lines, or if you're a household that maxed out credit cards, if you're cash strapped and nobody wants to borrow your money, you have a problem if you need to come up with money. And so that is a general principle there. The funny thing is that for households, they say you have to have like 2 months or 3 months, depending on the financial advisor you talk to, of cash or sitting in a savings account to cover 3 months worth of expenditures. You might have heard that advice. In principle, it's okay advice. A good credit card would also help a lot there. The funny thing is that for firms, we don't say that. So why are firms now into problems? Why don't we advise firms and say, well, maybe you should have like 3 months worth of cash sitting in the bank account to cover like your cost. And there's a good reason for it, because the amount of cash that the firm would be holding sitting there is just sitting. It's not doing anything. It's just your insurance policy, and you can think it may be a bit of an expensive insurance policy right there. So that is one. The second thought is what does a shock do in this case? Maybe it just speeds up the process of something that would happen anyway. So maybe I would have defaulted on my mortgage in a year time, and now it just happens in COVID because it just happened earlier. And so the idea of weeding out the bed, and this can be for households, and this can be for firms, maybe it's just being sped up. So maybe in that sense, it's not a bad idea. There's two forces that work in opposite ways. One way is everybody is defaulting at the same time. That is not good. So then you can think of macroeconomic effects of if a lot of people at the same time cannot pay their mortgage, that might bring banks into problems. So that might actually spill over to other, like 10 people who default, a bank can handle that. Like 1,000 people who default, I don't know. That might be a bit more of just passing on the problem there. What might work in the opposite is that if you have a lot of people defaulting at the same time, is that maybe they can bargain for better conditions. So if I would default next year or last year, I would have to bargain with my bank, and my bank would just, take advantage of me. Now, because I'm not the only one, there's many more people, maybe the balance shifts a little bit into my favor, that I get a little bit more leeway from the bank in that sense. Which one it is, I don't know. So you can think of both working at the same time. There. The third one that I want to mention is government debt. And I just want to mention that because that is a big concern. Of Argentina is a very major concern. But also for Canada, there's people that said, well, the government is now racking up debt. Can we afford to pay that? And the short answer is yes. Because as long as the government of Canada can issue debt, that means that on the other hand, on the other side, there's somebody who's willing to take on the debt. Because for every person that borrows, there must be a lender. Basic economics. If the government of Canada wants to issue debt and there's nobody willing to take it because they think the government of Canada is unreliable or the government of Canada is over-indebted and it's too risky, then you can try to issue all the debt you want. It's just not going to happen. So the very fact that the government of Canada can issue this amount of debt must mean that somewhere in the economic system that's being absorbed, that's being taken. And if you look at the interest rates that the government of Canada is paying, it's no problem at all. And so this is the type of thing of if your roof blows off your house, you will borrow money to repair your roof if you don't have the money. Why will you borrow money? There's nobody who's going to look at you and say, are you insane? Are you borrowing like 20 grand to repair the roof on your house, or like 50 grand to repair the roof on your house? Maybe you should just sit out through the winter with the roof off your house and save up for the money until you can pay for it. There's nobody who's going to say that, at least nobody that I know. Of course you're going to borrow money because if you don't repair the roof, your house is going to deteriorate in value. And so that is basically, I think, at least for now, for the last half year, I'm pretty happy with that analogy to apply to COVID. Like we borrow money that the government can just pay back over the next 40 years or 50 years or even 100 years. It doesn't matter. Like, at least if we learn something from this, and if we repair some of the cracks into our system, then it might be actually worth the cost actually to do that. So.
Do you think that that's the same for at least some developing countries? Because at least when it comes to the people who are giving this debt, Canada and the US and Europe, they're fairly safe. So I'd be demanding the debt. Now, if the debt is coming from a developing country like Argentina or Brazil, like you'd be having to really struggle in the debt market to sell the debt. So,
I'm not an expert in international macroeconomic or international economics, but I think the one thing I see just from reading newspapers and looking around is that COVID also shows the cracks in our global economy or global. And we have the luxury that we can lock down the place. And people don't like it, people complain, but in a way it is a luxury. We actually can do it, and the government can pay people to just sit at home. And there's many countries of the world where the government doesn't have the money, where if people sit at home, they will starve. And they would like to lock down the place. They can't. Or if they lock down the place as they did in India, it even doesn't help. Like it comes back with a vengeance. And so I think to put it in a larger perspective, I think many of the things that we talk about are really rich world problems, unfortunately. So it's a very sobering thought.
Yeah, no, thanks for the answer.
I have some more time. I think there was a couple of questions in the chat, but I leave it up to the...
I believe this should be a wrap up for this episode, though. If you have any questions, you can stay after, if Professor Velokub does allow that, or else you're free to go. And thank you for tuning in.
Thank you, everyone. You can still ask questions. I think Professor Velokub, you said you have some time.
I have some time, yeah.
Lorena, but thank you very much for the USC and for the professor for your time. It was
Thank you.
Was it clear enough?
It was actually. You had like a really good points, and I'll definitely be spending some time thinking about those right now.
Very good. You had some very good questions, so appreciate that.
Thank you, sir. Yeah, have a great day, everyone.
Bye. Thank you. Looks like everyone's smiling.
I have never done a podcast before, but was it okay?
Yeah, it was great. Yeah,
Yeah,
thank
it
you
was
so
really
much. It was more of like a conversation type thing. Yeah, I think when it's more of just presentations, people can kind of get like bored and like lose focus. But when it's two people talking back and forth, it's more engaging.
I've done enough talking to the screen, so I'm happy to talk to other.
Yes. I really enjoyed the episode. Thank you.
Very good. Yeah, thanks for having me. It was a pleasure.
We do have a few questions if there are no questions live right now. Is it possible to ask you?
Yeah, absolutely.
Okay, so we have quite a handful of questions from our registered students, and we just picked a few that are quite important for this episode. So how is the real estate market now under the effect of COVID-19?
So I actually tried to look at that. It's not easy to find any numbers on that. So I think my feeling is, but again, this is a bit of a feeling, is that construction of new homes is a little bit delayed.
Mm-hmm.
For a couple of months, that construction was down. I think when it was really locked down in April and May, I think house prices went actually down a bit or didn't grow as much as they were in the previous. But there was also not a whole lot of supply of houses, so there were many people that were just not selling houses. I think there was a brief, like one month or so, where there were like real nice opportunities for people who were like ready to buy now. Mm-hmm. And so I've heard of several like cases in my environment of people who have been waiting to buy a house who actually saw like this is the time to buy. Mm-hmm. In general, the housing market is very is like even more difficult to describe than the labor market in that sense. Yeah.
I've heard on the news that like people are starting to look towards buying houses at suburbs instead of cities because there's no need to commute. Do you think that would be a trend going on the past few months?
I've read the same. I'm surprised because that basically means that either those people are very very confident that they can keep up this way, mm-hmm. keep it this way, And I think those are typically people who already had like some flexibility on the job and who are just now milking that flexibility to the max.
That's true.
But I think if you had your typical 9-to-5 job in the city where you had to commute, I would be a bit hesitant to move out, because if it's a year from now everything opens up again, then you have a horrible commute waiting for you. But yeah, I think the people who have that's probably already like everybody working IT. It really doesn't matter where you work, and so all you need to have is a house with a good internet connection and a quiet basement or so, something like that. And
That's true. Just one last question about revenge spending. So there's a student that pointed out, because COVID has limited people's activities and consumption, but then since more effective measures have been put out to limit the spread of COVID, so businesses are starting to get back, do you think there will be a revenge spending going on, and specifically for luxury brands in China? And can this behavior help the smaller businesses?
so revenge spending is that I'm not going to buy luxury products from China, but I'm going to buy them from local. Do you think that it's
I think this question is from a student who's currently in China. I'm not sure, but then I believe they're just asking for the concept of revenge spending and whether or not that's a possibility.
So the funny thing is I have never heard of revenge spending, of the term.
Me neither.
Same for me.
I think it's more in the ballpark of, say, shopper attitudes in marketing. That it's more of a psychological in marketing. So the fact that I haven't heard about it doesn't mean that it's not true. So it's just I have never heard. It's not really a concept in economics.
I searched it up now. Apparently, it's overcompensating for the fact that you weren't spending as much during quarantine. So now they're compensating for the fact that they didn't spend before, and now they're spending more. So like revenge.
Like a license to spend or so.
Yeah, pretty much.
Can be. I can think of two groups of people. I think one group of people who is relatively unscathed through the pandemic. So if you keep your job, if you keep your income, you will find yourself after 4 months of lockdown with probably a bit more savings because you could not consume as much. Which is a very nice feeling because you didn't have to do anything special for those savings. It was not like hard effort. It was really like you spend less and it just happens. It just happens so to be. I think for those people, I can imagine that they will look at their savings account and they say, oh, well, you can spend more. That type of thing. But it's deliberate, like a license to spend or revenge spending. That I don't. I think that is more like a deliberate action of. I feel all this anger and emotions because I could not spend and now I want to spend and now I'm going to spend, like something like that. So that is one. The other group of people I think are really suffering. Like if you lost your job or if you're on SERP, then you consume less, but your income also went down. And your future looks uncertain. And so I think for those people, they are really more mindful of their budgets. They can still have a lot of anger about that, but I don't think that, that might come up in unexpected ways of spending, but I'm not sure that it actually will be in that sense. But we're going to see. It's going to be interesting for all sorts of disciplines. It's going to be an interesting time.
Yeah, I've actually never heard of the term before too. So maybe it will be in our textbooks in the future if it actually becomes something.
It might be in marketing textbooks or psychology.
Maybe consumer spending, like behavioral finance.
Well, behavioral marketing.
Behavioral marketing, yeah. I think that should be all of our questions for now. But thank you again so much for joining us today. I really appreciate you guys made our first episode very interesting, informative.
Very good. Happy to.
Thank you.
Thank you very much. Thank you so much for having me, and hopefully the next time we'll be in person.
For sure. Thank you. Have a good day. Bye.
Very good. Thank you.